Appcoin season. If you're not familiar with the term, this is really kind of alluding to why revenue generating crypto applications are going to lead the next bull run. So in every crypto cycle, a new narrative typically emerges to define what captures capital, also attention, momentum. And once kind of, we've seen that, it was Bitcoin, then it was layer ones and meme coins, and they're viral runners. Well, now we're entering a new era, one that rewards kind of substance over hype, right? Cash flows over speculation. This is Appcoin season. So the shift isn't just anecdotal. Pretty much it is in the numbers itself. On-chain application revenue is staggering right now, surpassing over pretty much all of the blockchains together, right? In June 2025 alone, crypto native apps generated close to 473 million, accounting for about 63% of all on-chain revenue. Blockchains captured about 37% of that. Pivotal inversion of crypto's historical revenue model there, and it's actually really reshaping how capital is now being deployed in the months that are coming. So we look from infrastructure, for example, to applications and where that value shift is, right? So in previous cycles, you've seen investors pouring billions into layer one blockchains, Ethereum killers, right? Base layer innovations, promising new performance standards. And, today, all of those rails are already there. The shift is now focusing to who can actually build the fastest trek and who's actually running the most profitable trains as well. So at the end of the day, you've got these applications now directly serving users, be it in trading, borrowing, in the asset management or in prediction markets. And this is driving the lion's share of the on-chain revenue. I think a fundamental shift akin to something to the early days of the internet, where infrastructure plays like Cisco eventually gave way to application giants like Google, Facebook, and Amazon, etc. So I think in crypto, we're seeing something similar here. So when we look at the sector breakdowns where the money is flowing, trade tooling definitely getting a lot of revenue. There's about 116 million, about 24.7% of the app revenue, right? Spot decentralized exchanges doing about 85 million, about 18% of that. And then derivatives platforms about 17%, capturing about 18 million in revenue. And launch pads about 71 million in revenue, about 15% of the market. And then you got crypto wallets, 32 million in revenue, 6.9% of the market. Lending protocols like Aave, 6.7%, about 31 million in revenue. Then you've got like 54 million maybe spread across other things. So I think derivatives, they're definitely dominating the leaderboard there, and DeFi primitives, of course. So I think margin definitely matters. Not all revenues the same, right? Raw revenue tells part of the story, but I think margins reveal who's built to actually last. DEXs, for example, retain just 13% of the revenue after paying liquidity providers, right? Lending protocols capture about 26%. Trade tools like aggregators and bots often keep about nearly 100% of the fees that they collect. So across the ecosystem, the average app retains about 32% of the fees users pay, right? So I think this app revenue boom is really just going to continue to grow. The correlation between Bitcoin's price and app revenue currently also sits at about 0.784, a strong positive relation there. Bitcoin climbs, I think we'll see the rise in app usage as well, and more users flood into the crypto ecosystems to trade, borrow, and speculate. I think if Bitcoin hits that a target of about 220,000, app revenues could actually reach over 1.4 billion per month, which is a 4x jump from the current levels right now. I think, in other words, Appcoin season isn't just a bet on a single product. It's a leverage play on the entire crypto cycle. So the winners won't be random, right? Of course, you've got apps like Axiom Trade, DEX, you've got Pancake Swap, Athena stable coins there, GMX derivatives, Aave lending, Aerodrome, DEX, Photon derivatives, Phantom, Radium, all of these things to look out for. But I think the changes are there for investors. I think high portfolio margin protocols, low retention infrastructure, back apps with real volume and network effects, using revenue margin data for guiding entries and exits into your trades. Allocating dynamically based on actually real sector momentum is also something to think about. I think we're now entering a phase where the market is really maturing. Fundamentals matter, metrics also matter, applications that can serve real users, I think, will make real money. Finally getting that recognition as well. It's Appcoin season. If you want to learn more, make sure you go to Decentralize and check out the best crypto apps in the game in our ecosystems. Tab, like, share, subscribe, turn on the notifications. I'll see you guys in the next videos. Bye.